Hey, everybody, and welcome back to the Business from Scratch podcast and the first episode of season 2. I'm your host, Abby McGee. And before we get into today's episode, I just have to take a second because this is episode 27 and we have crossed 40,000 downloads, which feels wild to me. I mean, you guys, thank you. When I started this thing, I was just, hoping that somebody out there, other than my mom, was going to find this useful. And over 40,000 of you have. So thank you from the bottom of my really surprised and very grateful heart. And if you're going to hit a milestone like that, you might as well celebrate it. Because today, we are coming to you from a brand new studio with new production partners. And I have to say, it just feels really good. It sounds better. It looks better. And honestly, it's got me really fired up to bring you even better content going forward. And if you caught the last episode, you already know that finding a new home for this show was about a lot more than just an upgrade. Sometimes life throws something at you that you absolutely never saw coming, and you have two choices. You can let it stop you, or you can let it fuel you. And I, of course, chose fuel. And being here in this new studio with the right people in my corner, it feels exactly like it's supposed to feel. So let's get to work, because that's what we do here. You're listening to Business from Scratch, the podcast for people building businesses they love without losing themselves along the way. I'm your host, Abby McGee. Let's get started. Today, we're talking about something that a lot of small business owners either avoid or pretend they understand more than they actually do. And if you ask my CPA, Jen, if I'm an expert in this, she's going to laugh a little bit and then she's going to say, well, she tries. Listen, this podcast is a learning experience for me too. And while I do know how to handle today's topic, if I'm honest, I need a little kick in the ass to get back into it in a bigger way too. So today we're talking about our P&Ls and our balance sheets. And I know some of you just tensed up a little. I did right along with you. Maybe you're thinking, I have a bookkeeper for that, or I look at my bank account balance and that tells me everything I need to know, and I get it. But if you can't read your financial statements, you are flying your business blind. You might be making money and still running out of cash. You might think you're profitable when you're actually just bleeding out, and you won't know until it's a problem. So today we're going to fix that. You don't need an accounting degree to get something out of this. I'm going to stick with just a plain old English walkthrough of what these two documents are, what they're telling you, and what to actually look for when you pull them up. Let's start with the one most people have at least seen before, the P&L. So, what even is a P&L? Your profit and loss statement, also called an income statement, is basically a movie of your business over a period of time. A month, a quarter, a year. It shows you what came in and what went out, and then what you kept. That's it. At its core, it answers one question. Are you profitable? And if you aren't asking and answering that question regularly, you are missing the point of owning a business. Think of your P&L in 3 layers. Layer 1 is revenue. This is everything at the top. All the money your business brought in from sales or services. Simple. This is your top line. Layer 2 shows your expenses. This is where it gets broken down. You've got your cost of goods sold, or your COGS, which is the direct cost to deliver your product or your service. Materials, labor directly tied to production, that kind of thing. Then you've got your operating expenses, your rent, your software, marketing, payroll for your non-production team, insurance, etc. Think of this as the day-to-day cost of running the business. Layer 3 is your profit. Once you subtract COGS from revenue, you get your gross profit. Then, once you subtract operating expenses, you get your net profit or your net income. That's your bottom line, what you actually made, not just how much you sold. This is why I cringe and I roll my eyes a little when business owners just say, I've built a multiple 7-figure business. Well, la-di-da, so what? Yeah, that's impressive, but show me what's actually left at the end of the year. That's the number that means something. Now, Here's what to actually look for when you open your P&L. Here's what I want you to pay attention to. Gross margin. Take your gross profit, divide it by your revenue, and then multiply by 100. That's your gross margin percentage. Here's a real example from my business, Salt and Charm. Our Q1 gross profit was just under $300,000 on about $506,000 in revenue. That puts our gross margin at roughly 59%. What that means is that for every dollar we brought in, we kept 59 cents after covering the direct cost of delivering our work. That's a healthy number, and it's the kind of number you want to know cold, because if that percentage starts shrinking month to month, your costs are creeping up somewhere, and you need to find out why before it becomes a real problem. Next, look at expense categories that are growing. Don't just look at the total expenses number, look at the lines. Is your software spend up? Is payroll growing faster than revenue? Those details matter. And finally, what is your net profit trend? Are you moving in the right direction? Even if you're not profitable yet, you want to see the trend improving. If it's getting worse, that's a flag. One more thing. Your P&L is only as accurate as your bookkeeping. If transactions aren't categorized correctly, the whole thing is telling you a lie. So make sure someone is keeping that clean, whether that's you, a bookkeeper, or your accountant. One thing I know about myself is that bookkeeping is not my strong suit. I would be in a heap of trouble if I kept that task on my desk. So early on, I handed all of that over to my CPA, who keeps me straight. And even though she does a great job of putting the numbers in the right spots, I still have to know how to read the dang thing, or I have no way of knowing if we are heading in the right direction. This episode is brought to you by the Starling Whiskey and Wine Bar, the neighborhood bar here in coastal North Carolina in the Cargo District. We built the Starling to be the kind of place where you're greeted by name, where conversations linger, and where exceptional cocktails, wine, and whiskey are shared around tables that feel like home. Whether you're meeting friends after work, celebrating something special, or just need a place to land at the end of the week, we love to welcome you in. You can find our hours, events, and private gathering details on Instagram at The Starling Bar or online at thestarlingbar.com. Mention the podcast next time you come in to receive 10% off any retail wine bottle to take home with you. We'll see you there. Okay, now let's talk about our balance sheets. If the P&L is a movie, your balance sheet is a photograph. It's a snapshot of your business at one specific moment in time. It answers a different question than the P&L. Not are you profitable, but what is your business actually worth right now, and how healthy is it financially? It has 3 sections, and they always have to balance, hence the name balance sheet. So let's talk about the 3 sections first. Assets is number 1. This is everything your business owns or is owed. Cash in the bank, accounts receivable, money customers owe you, inventory, equipment, property. These are your assets. Then your liabilities. This is everything your business owes. Credit card balances, loans, accounts payable, bills you haven't paid yet, payroll taxes due. These are your liabilities. And then owner's equity. This is the difference between the two. Assets minus liabilities equals equity. Think of it as your stake in the business. What would be left over for you if you paid off everything you owe? The formula is simple. Assets equals liabilities plus equity, always. If it doesn't balance, something's wrong in your books. Here's what to actually look for. What is your cash position? How much cash do you actually have? Not what's coming in, what's actually sitting there right now available. This is your oxygen. And without it, well, you can guess what is going to happen next. Your accounts receivable. If this number is high, that means you have money out in the world that hasn't come back to you yet. That's not always bad, but if it's growing and your cash isn't, you may have a collections problem. Then look at your debt load, your liabilities. How much do you owe and to who? Are your liabilities growing faster than your assets? That's a warning sign. And then your equity trend. Is your equity growing over time? This means the business is building real value. If it's declining, you're eroding the foundation. If you're a brand new business, it will take time to start and see trends, but keep an eye on it month to month anyway. Knowledge is power. So here's how I want you to think about these two documents together. Your P&L tells you how you performed. Your balance sheet tells you where you stand, and you need both because a business can look profitable on the P&L and still be in trouble on the balance sheet. If you've got too much debt or your cash is being eaten up by receivables that aren't coming in. The goal is to get to a place where you can look at these two documents once a month. It literally only takes like 20 minutes and know exactly how your business is doing. Not guess, not hope, know. If you're not doing that right now, start now. Put your P&L and your balance sheet in front of you. Go through the layers I walked through today. Start asking questions. Get your bookkeeper or your accountant on the phone if something doesn't make sense. That's what they're there for. Okay, that's episode 27. And what a way to kick off the new studio. I mean, is there anything more fun than talking about financial reports? I mean, it is fun when it helps you hold on to more cash. If this was helpful, do me a favor, share it with another business owner who needs to hear it. That's honestly how this show grows, and I appreciate every single one of you who has passed it along. And hey, if you want to go deeper on this stuff, make sure you're following along on socials because I'm going to start showing you more behind the scenes of how this stuff actually works out in the wild. We've got new episodes dropping every Tuesday, so make sure you're subscribed wherever you listen. Thanks for joining me on Business from Scratch. Follow the show for more honest conversations about building a business that works for you.